Welcome back to EDS, and in this video I'm going to show you how to stay calm and why you should stay calm when trading goes wrong or when positions move against you. Now at EDS we write options contracts, and a big reason why we write options contracts is because when positions do move against you, you have the ability to manipulate the position and sell more time and move things around to turn a losing position to a break even or a small loss or a small profit, and especially if you're writing or selling naked positions, which I'm going to show you examples of, it basically allows you to, in theory, roll indefinitely for as long as you want, and give yourself, just keep rolling the dice and just let things work out in your favor eventually. So we've got two positions in this very small portfolio at the moment, GDX and Macy's. Both are strangles, so we're just going to go one by one, and you might be seeing here that both of our positions are in the money, and usually this would sound alarm bells for most option sellers. However, for us it's not a problem, and I'm going to show you why. So the first thing I want you to pay notice of is our net deltas. Our net deltas are very small. They're below 30. Whether it be positive or negative, it's below 30, and that's very important. So let's just go with GDX first. So GDX is a strangle here. Well, it started off as a strangle, it's now a straddle. We're a little bit down on the position, but that's absolutely fine. I'm going to show you why. We're basically delta neutral. It has an IV rank of 18.1. IV was a lot higher when we initially put this position on, so volatility has contracted since we opened the position. We've been in this position for 26 days, and there's 26 days left on the contract as well. So let's have a look at the chart and see what's going on with GDX. So remember, this is a straddle at 38. So both our call and put, our short call and short put, are at the same strike, $38, and as you can see, price is literally exactly bang on or near enough. It's at 37.95. So let's have a look at the order chain. So this is what this position has done. So we initially opened up this position with it being a strangle at the 31.38 strikes, and we opened the position in and around here. Price moved up, our deltas started to increase, so we reduced our delta exposure by rolling the put side up from 31 to 34 and collected a 34-cent premium. Then price continued to move up, increasing our deltas further, so then we rolled the put side up even higher to collect more premium and to rebalance our deltas, to bring it back closer to delta neutral, and we collected 54 cents in the process. Price then moved even higher, our delta started to increase, and we simply just reduced our delta exposure again and rolled the put side and basically we just kept rolling the put side all the way up until now we are at a straddle situation. We have not touched the call side. We have only been collecting a premium and just reducing our delta exposure. Now you might be thinking, okay, so over here it says that we're down 55%. However, that's not actually the case. We're down 55% potentially on this latest position, because every time you roll, you're essentially closing one position and opening another simultaneously. So that's why that's displayed like that. However, if you actually look at our mark price, it's $2.43, and we've collected $2.37 in premium. So we're only down 6%. So a position that's completely moved against us, we're basically sitting at break even. Okay, and there's still 26 days left on this contract. This is how powerful writing options and managing risk and making adjustments is. A position that ordinarily we would be in a big loss right now, we are sitting at break even because we have been managing our delta exposure. Now our action plan moving forwards is going to be to let theta decay the value on these contracts a little bit further, and then over the next week we will look to make another adjustment and roll out into the next expiration cycle. If we can come out of this position at a healthy profit, say at least 25%, or maybe less potentially, just depending on what's happening in the market. But if we can get out of this position in this coming week, it is a Sunday right now, the market's closed, but if we can get out of this position in the coming week with at least a little bit of profit, we might just take the profit and run, and then look for a better opportunity elsewhere, because as we saw at the beginning, IV rank has significantly dropped. If IV had increased, or if it was still high, then we would be more inclined to sell more time. But because it's dropped, we kind of want to get out of this position. But you never know, IV might increase. So we'll just have to see what the situation is at the time of making the adjustment. But the plan is we're either going to get out of this position at a small profit or at some profit, or we are going to roll it out in time, buy back the guts, sell the wings, and essentially rebalance our deltas, turn this straddle back into a strangle, and reset our deltas, and get our contracts out of the money again. Because remember, theta decays fastest when your contract is out of the money. So that's what GDX looks like. Next up, we've got Macy's. It's a very similar situation. We are in a straddle again. It started off as a strangle, but if you have a look at our delta here, we're still below 30 deltas. We look to make adjustments anywhere between 30 and 50 deltas. So everything looks healthy here. Again, don't pay too much attention to this open PNL, these numbers here. We're going to have a look at the order chain in a second. IV rank is at 26.6, which again is significantly lower than where IV was when we opened the position. We've been in this recent position for 4 days since the last adjustment, and there's still 26 days left on these contracts. So let's have a look at Macy's. So as you can see here, both our short call and short put contracts are at the $15 strike. Let's have a look at the order chain. So we initially opened this position with it being a strangle at the 15 and 20 at the 15 strike and at the 20 strike. I believe price was in and around here ish. This order chain is a lot more interesting though, so let's have a look at what happened. So price came down, our deltas increased, so we rolled the call side down to the 17 strike. We then rolled the call side down even further to the 15 strike. At this point it was a straddle at the it was 15 on both sides, on the put and the call, and then what happened was price then moved down further. Instead of going inverted, what we did, because we had collected quite a lot of premium up until this point, we essentially just paid a little bit, 57 cents, to roll the put side down from 15 to 14, which then put us in a tight strangle situation at the 14 and 15 strikes. We still had more premium on this position than what we had when we initially opened it. We opened it with 57 cents, collected 7, collected 59, paid 57. So we were still in a very healthy situation. That's why we made that adjustment there. And then price kept moving a little bit further below. Our deltas increased, so then we rolled the call side down from 15 to 14. That then put us at a straddle at 14. We collected 32 cents in the process. And then this is an interesting adjustment here. So we were at a $14 straddle. We then rolled the put side up to 14.5, and then rolled the call side up to 15, and we paid 36 cents to do that. The reason why we rolled both sides is because one side helped to pay for the other, and again we had been collecting healthy premiums all along the way, so it was perfectly fine to pay 36 cents to make that adjustment and get our position out of the money again, our contracts out of the money. And then what we did, price then continued to move higher. So then the most recent adjustment that we made was rolling the 14.5 up to the 15 strike, and now we are at a $15 straddle. Now you might be wondering, we were at $15 straddle before, so why go through all of this work just to be at the same position that we were before? Well, the reason is because nobody knows where the market's going to go. We are not in the business of trying to predict where the market goes, although we do have methods of predicting where the market goes inside EDS Premium, or where the market can go, and we are pretty accurate with that. But we don't rely on that. It's our job to manage risk, manage deltas, manage theta, manage vega, manage the Greeks, and essentially just make adjustments and keep your Greeks in check, and to stay in business, basically. And what I mean by staying in business is that when you are selling contracts, the edge is pretty much built in for you. You don't need to go and find an edge. As long as you're selling in high IV environments, the edge is built in for you. So it's our job to stay in business. And if price continued to go lower, then we would have been in a good spot at the 15 straddle earlier. But price happened to return higher, so we had to we got seesawed, we got zigzagged, however, or whipsawed. That's the word I was looking for. We got whipsawed, but we couldn't have known that ahead of time. Hindsight is 2020. So that's why we have this approach, so that no matter where the market goes, we just follow the market and manage our risk, basically. And now we are currently at a $15 straddle. We're in a marked $47 loss at the moment. However, that's not a problem. We've got 76 cents in premium on this position. We started out with 57, and we've managed our deltas the whole time. So the plan of action here, because our delta is at 21.92, negative 21.92 at the moment. We've got 26 days left on the contract. So we're going to see what the market does over this coming week. If our deltas increase, then we will look to sell some more time, roll out into the next expiration cycle, and rebalance our deltas. However, if price kind of comes down a little bit, then we will simply just sit tight, let price come down, and look to potentially make another adjustment towards the end of the week, similar to GDX. Buy the guts, sell the wings, sell more time, if we aren't in a profit at that point. So if we're in a profit, we're just going to take profit. If we are in a situation where we haven't hit, we're not in a profitable situation, and it's come to the end of the week, then we will simply just sell more time and rebalance our deltas and widen our strikes. That, as I say, buy back the guts, sell the wings, and simply just roll the dice again and let the odds work out in our favor. We just keep doing this over and over and over again until we win. It's kind of like being the house at the casino. You've got somebody gambling on blackjack, but we are the house. Most of the time we're going to win. Every now and again they will win big, or they'll win. And when they do win, we just keep them at the table, give them drinks, give them whatever they want, and we just keep them at the table, and we just keep dealing hands, and eventually we will win. And that's kind of what we're doing here. So with that being said, you do need to keep your position sizes in check. None of this is going to matter if you are being a degenerate. So one way to know how to position your sizes correctly is by clicking the link in the description and then clicking on this free position sizing template that we've created. It's free, everybody can get a copy of it. It'll take you to the spreadsheet, and the way it works is you enter in the size of your portfolio. So say if you have a $15,000 account, you enter that, and then you can then enter in whatever the current VIX level is below it, and then everything will be automatically calculated for you. It will tell you the maximum amount of buying power to allocate to defined risk positions, undefined risk positions. What we went over, the two examples we went over today, are examples of undefined risk positions. It will tell you how much of your portfolio you should be using or allocating to short premium strategies in general. And as long as you're following this over the long run, you'll be absolutely fine. If you do have a very small account, then you probably want to be a little bit more aggressive. on these numbers, but try and stick to this as best as you can. If you have a large account, you definitely should not be violating these guidelines here. Over the long run, you'll be absolutely fine. If you do want to learn in more detail about what we do and how we do it, click on EDS Premium. Again, link will be in the description. And get yourself signed up. Inside, you will have access to our portfolios that will allow you to see the positions that we're placing, how we manage risk, how we make adjustments. All of our adjustments that I just showed you here, we post them in the Discord in real time. So if you were following along, you could have made the same adjustments yourself. There's also a full course, so no prior knowledge is required. We will teach you everything that you need to know from start to finish. It is a private community, so if you do get stuck, you can speak with myself directly or with other like-minded individuals. There's a 100% money-back guarantee, so once you have studied the full course and followed some of our trades for at least 6 months, if at that point you haven't been profitable, then we will work with you for free until you are. Or you can simply request a full refund, so it's completely risk-free. And right now to join, it's $9.99 a month. The price will be increasing. However, once you're in, the price is locked in for you for life. So the earlier you get in, the more you are rewarded on price, basically. The aim of EDS Premium is to teach you the skill. We do not want to keep you dependent on us. We want to teach you the skill. We want to get you to a point where you know how to manage risk, you know how to make open positions, you know how to make adjustments, and we aim to get you to a point where you are completely self-sufficient within 6 to 12 months. You are always welcome to stay and be a part of the community, but within 6 to 12 months you should be good to go. And once you have learnt the skill, it's something that you can do for the rest of your life and nobody can ever take it away from you. So it's a very, very powerful thing to learn. And with that being said, I will see you guys on the inside.